All right, welcome everybody. Today we have Ben, the CEO of Bybit. Bybit is a Bitcoin futures exchange. They run perpetual contracts on Bitcoin dollar, on EOS dollar, XRP dollar, and ETH dollar. And they have just recently launched linear USD contracts, USDT Tether, but primarily their main product has been inverse contracts where you deposit Bitcoin and trade Bitcoin dollar to earn or lose Bitcoin, and the same for EOS, ETH, and XRP. So, welcome to Ben. Thanks for joining us.
Hello, everyone. It's a pleasure to be here. Thank you for having me.
Okay, so let's get started. There's a number of users here, members of Whalepool, who have started using Bybit. A lot of them have been frustrated with some of the competitors who have not so great technology and stuff like that. So they're happy to see that you are coming to talk directly to the community. We appreciate that. Let's start with some basics on the background of Bybit. So, what exactly is your jurisdiction? Like, where is your headquarters, and where is the team based, and the credentials of the key members of the team? Could you talk a bit about this?
Yeah, sure. So we're registered in BVI. The main headquarters is in Singapore, but we do have a developer office in Shanghai. Also a customer support center in Philippines. We also have a small BD office in Taiwan. We're planning to extend to probably Vietnam, Thailand, and these places this year, but that's more for local operations. As for the people, we have a little over 150 people now. I would say majority are still developers. We are a very product-focused team and also very derivatives-focused. As far as for credentials on the founders, we have actually four founders. I'm the more outspoken one that most people are familiar with. My previous background, I ran a Forex broker for more than 7 years. It was called XM.com. So I sort of started, I was the sort of starting member for that business. And then eventually, I think XM now is one of the largest retail broker. We are regulated in many different countries. So I left that in 2017. The other three founders, our CTO Owen, was one of the major architecture guy behind Tencent. So he worked at Tencent for more than almost 10 years, and he was the leading leader for the Tencent Groupon at the time, and also the QQ show, all the QQ business for Tencent, which later evolved into WeChat. And after Tencent, he moved to Noah Wealth, which is one of the largest wealth management firm and also stock-related funds trading firm. So he actually built the underlying fund trading system for them, and so he has a vast knowledge in matching engine and this type of related business. So he came in and built the underlying architecture for Bybit. And then we have another two more. One is Ken, who is a very seasoned trader in CME and Shanghai Stock Exchange. So his role in the business is more for risk management and also financial product designs. So he had more than 10 years experience in trading, and he also ran a quantitative trading firms starting in 2016 late in crypto, and he had some very good results back then. So we asked him to join him on board. And lastly, not least, it's Yaxi, who is actually a very popular poker player. She was probably one of the most popular poker players in China. She was sponsored by PokerStar, and one of the team pro player. And then later on, she worked at hedge fund. So she came in originally helping us to do all the first investment as a CFO, but now her role has sort of evolved into operations. So you see a lot of these events, operation. We had a St. Patrick Days promotion. Soon we will be having a linear contract promotion. That's all organized and arranged by her. Me, I'm sort of indirectly in charge of the business as BD, customer support, all the front end part. Yeah.
Cool. Yeah, that sounds like a pretty strong team. Good background. And you guys you were founded in 2018, or when did you launch?
The project started in March 2018, and we launched in December 1st. I remember when we launched Bitcoin, I think a day later after we launched, it dropped to like 3,000 something. So we started from the harshest environment, the bearish market, until we launched. Yeah.
And you didn't do any kind of like ICO or token sale. There's no exchange token associated with it, right?
No, we don't have any. We want to focus more sort of on the exchange part of the business, and we were never really, all of our background, we were never really so much crypto ICO related things. So we decided to go through the traditional routes, fundings and getting investment, and get the business started. That's how we did it. Yeah.
Okay, and in terms of from the user's perspective, do you have any KYC requirements? And if you do, are there any kind of restrictions on deposits and withdrawals or anything like that?
We have no KYC, and also, but we do have some jurisdictions that we do not allow, such as USA, Quebec area in Canada, all these other places, Iran, North Korea, all these places. And also we don't allow Singaporean to trade on Bybit. That's just because we're headquartered in Singapore, and we haven't received any clear instruction from the local government. Yeah.
So how do you enforce that jurisdictional restriction? Do you have just an IP check, or what's the way that you prevent them from trading?
Yeah, we have an IP check, registration IP on the jurisdictions that we do not allow. But we are actually going to implement a trading ban as well. So far, we don't have a trading ban on the IPs. But we are planning to implement that probably in late April. That means all the restricted jurisdiction, you will not be able to log into Bybit with that specific IP.
But what if I'm on vacation in the US, but I'm not a US person? Am I not allowed to trade while I'm on vacation, or how does that work?
In generally, the U.S. citizens we do not allow. But obviously, if people trying to use different VPNs, is very hard to spot.
Right. But I mean, like, for someone who's not a U.S. citizen but who happens to be vacationing in the U.S., if you do a trading IP ban, then they would basically have to use a VPN or something, right? But it should be otherwise allowed technically to be trading from a US IP as long as they're not a US person in terms of residency or citizenship.
Yeah, we had the original debate in the very beginning, but later on we decided, especially from our lawyer suggested, it's better to respect the local, the US government for that, and the trading IP as well. Yeah.
Okay, fair enough. Okay, let's move over to like the tech stack that you guys have on the system. A lot of people use Bybit as sort of like a BitMEX replacement, and that's because BitMEX has this tech stack that's relying on KDB, which is like a database mixed in with a matching engine, which is a bit goofy and doesn't scale so well, and they do a lot of load shedding to try to keep it going. Can you tell us like what languages, database software and stuff you're using on the back end to avoid these kinds of scaling issues?
Yeah, so we were actually very lucky as the latecomer that we have someone to reference to. At the point, it was BitMEX and OKEX. We looked into the tech, although we still don't know what's their core fundamental structure, but I believe our structure is quite different than BitMEX. First is our matching engine is written in C++, and also I believe it's not so much about what language is written in, it's about the structure of how the order is being processed. For example, we know that from traditional finance, this is also from Owen's background, that normally when the order is being placed through, either is through the API or the front end. It goes through directly into a module, and that's the matching engine. And the matching engine would have to wait in line for the risk check, for the margin calculation, and then so all of that is built in one module. That's how normally in traditional finance has been built. But when we look at that structure, there's an issue with scaling, especially when you have so many clients trading at the same time. And in crypto, there's so many clients, especially in big price spikes, that you will simply not be able to handle that much volume. So what we did is we separated the order service. So when the order is entered into Bybit system, we actually use sharding to process the order service and all the margin check and all the risk management, all of that away from the matching. And because of that, we can actually do shardings in different servers. Once that is completed, it all sends to one single point, which is the matching engine. So for us, the matching engine it's not so complex. Our matching engine it's just some simple codes. It's not that so difficult. But because the structure, the underlying structure, we are able to offer much more TPS. And also because the sharding, whenever we need more order processing, we can just add on to more order servers. And for us now, each sharding server can handle about 10,000 orders now. And if we want, we can just horizontally expand. Yeah.
Okay, so it's horizontally scalable via the sharding in such a way where if the load is increasing a lot in terms of the activity in a volatile environment, you could just spin up instances to handle. You said it's 10,000 orders per second, or?
Right now, per sharding server is 10,000, but right now our capacity is about 100,000. But whenever we reach that capacity, we can just increase it. I mean, to be honest, for us right now, the biggest challenge it was never the matching engine. I think the matching engine part alone it's not even reaching 20 to 30% of its capacity. So we still got a long way to go. Yeah.
So, but it's like split into microservices that horizontally scale, so that you could theoretically run like 1,000 different shards that handle like extreme load. Is it automatically run, or do you have to manually run these additional servers to handle it?
I believe it's manually. Right now we are pretty far away from reaching the ceiling, and that's why with all this volume we've seen so far, we've never reached the ceiling for our capacity. But mostly it was from the client's feedback, at least, it was front end lagging. There was a lot of clients was complaining about, and which we actually fixed in this release of the USDT linear contract.
Okay, yeah, because that was the next thing I was going to pivot to, because a couple of weeks ago, March 12th, 13th, 14th, basically every platform was suddenly bombarded with crazy amounts of order volume. And basically almost every platform had some kind of problem or another. And there were some users on Bybit who were reporting some kind of lag in the performance when they were trying to create orders or to manage their position. So you're saying this was a front end bottleneck and nothing to do with the back end system?
Yes, it is very much a front end. Actually, at the time, our clients who were trading on our app, they didn't experience any the lagging issues. And also, the lagging issue was very specific to different people. One of the major problem was the way our front end was built. It was consuming too much computation power. It was too much CPU consumption. So especially when all this data being pushed into the front end, it really jams up your browser. So if you have a very strong PC, you should be fine. And that's why a lot of the clients was okay, but some didn't. That was because we basically jammed their browser with all these older updates. Which we kind of changed the whole underlying structure in this new release of the linear contract. Right now, it should be much smoother on the front end. And if that worked out, we are going through debugging now. We're going to also apply the same structure to our current inverse contract.
Okay, cool. And you have a testnet or demo kind of environment that runs side by side, or how does that work?
Yeah, we do. We have a testnet.bybit.com, and you can just go and try it. But the USDT linear contract is already live since yesterday. Yeah.
Okay, cool. Yeah, we'll get to the product stuff at the last. I just want to first hit the custody of crypto. So you're a pure crypto and stablecoin exchange. So you're not handling fiat. And I saw that you process withdrawals manually 3 times a day. So can you tell us a bit about the general model for how you are storing the crypto, and are there any limits on withdrawals in any cases? And yeah, like how exactly is that structured? You don't have to give any kind of secrets, but just in general, so people understand the security model that you're using for custody.
Yeah, so all of our crypto are stored in a cold storage. For Bitcoin, it's a multi-signature cold storage. So we actually have to, activate that multi-signature every time when there's a withdrawal. Our withdrawal team will tell us the amount that's needed for that specific withdrawal, and then the founders will have to 3 out of the 4 have to log into our cold storage with the keys to unlock and deposit and withdraw that amount into the temporary wallet for the manual withdrawal, and then the manual withdrawal is processed through that wallet. Yeah. So all of the process is completely manual.
And so, okay, so it's all in cold storage, but then when the founders are moving funds to be withdrawn, is that moving into a hot wallet where it's on the server, or do the founders again have to process the withdrawals that go out to users?
Right now, it's actually we just use a hardware wallet for that withdrawal person to withdraw that, and that there's a special algorithm to run the batch withdrawals.
Okay, cool. Yeah, so it's basically uh, a cold wallet process that then sends money into a hardware wallet, which then has some kind of script that batches through the client withdrawal requests and has to be then unlocked by the employee that is running this aspect of it.
Exactly. Yes.
Okay, so it's not a hot wallet per se. It's then still through hardware wallet, which is more or less cold wallet.
It's from hardware wallets to clients. That's it.
Yeah.
There's no hot wallet. Yeah.
Yeah, cool. Okay, let's. Is there any plans for fiat support, or are you sticking with crypto only and stablecoins?
We're actually integrating to a few, the credit card and also local bank providers, because we are moving into Southeast Asia and some of the small European countries where the clients' feedback was they really love for us to offer any sort of credit card deposit method. So we are talking to Simplex, XM Pool, all these guys. We're actually integrating, I think, XM Pool for now, and might be integrating a few more, just to give them a fast credit card sort of local bank option. But when they click on it, they will have to do KYC with that provider and basically buy the coin from them, and then they will transfer instantly to their Bybit wallet. So that's how it works. But we actually still don't handle it. We just present an option for a third party to handle that and a faster withdrawal, a deposit, I guess. Yeah.
Okay, so that actually brings up another question, because people have noticed that BitMEX is potentially going to be pivoting to a KYC model where they're going to start asking for documentation from users. How does Bybit view this issue of KYC philosophically? Is this something that you have plans to implement KYC of any sort, and what happens if there's some kind of pressure to be doing this?
For now, we would like to keep not non-KYC as long as possible, because we understand the crypto community. That's a nature of the whole crypto is to keep everything anonymous. So we would like to keep that as long as possible. But I mean, I was in the Forex business, and I would see how crypto would go, just like how Forex went. Regulation wouldn't necessarily go crazy and smash down the whole industry on one day on all countries, but local regulation will come out. I mean, we start to see Japan have local regulations on crypto derivatives. Maybe the next one is, I don't know, Singapore or somewhere. As these countries start to offer local regulations, I think in order for us to enter the country legally, you have to obtain a proper license in that country and then try to operate underneath that regulation. So at that point, it really becomes a business decision that, okay, do I want to enter Japan legally, or do I want to enter Japan as a outside exchange that their clients somehow happens to find us. So it's more of a business decision. We are now perfectly happy with the non-KYC model, which is also explains why we want to go a little bit harder on the KYC, not KYC, the IP ban on the trading, so that we can at least say we are putting an effort into this restricted region to the authority. And until that point, we cannot. We have to comply. Maybe we will have to do something, but then it depends on the local regulations and the license, what they require and all that.
Yeah, that makes sense, and I think it's exactly right that there's a significant portion of the crypto trading community that really values their privacy and is not interested to send their documents to an exchange or anything like that. So I think a lot of people would appreciate that. So in terms of the products that you are offering on the future side, it's only futures that you're offering and perpetual futures, which is perpetual swap. The ones that have gotten the most volume is the inverse BTC USD, and you also have EOS, XRP, and ETH versus dollar. Yeah, you've had some pretty decent success with this, and it's basically, well, I guess for the purpose of everyone listening, maybe you can describe how this works and how it's similar to BitMEX and what OKX has offered and stuff like that.
Sorry, man. Yeah, you're kind of breaking off on my end. I can barely hear you, but let me just try to understand. You're asking about the difference of Bybit product compared to BitMEX and OKX, and also what's our USDT linear contract about? What's new?
Yeah, correct. Just give for the purpose of the listener an overview of the inverse contracts you have been running, and then your new linear USDT contracts.
Oh, okay, yeah. We currently offer 4 pairs. The BTC USD pair, which settled in BTC, EOS USD, XRP USD, ETH USD, which all settled in their native token. But we released a new product yesterday, which is the USDT linear contract. Hello, can you hear me?
Yep.
Okay, yeah. We released that new product. With our old product, it's the standard perpetual inverse contract. But I guess the major difference, a lot of people actually trade these altcoins with us because I think we're one of the only exchanges that offers XRP settled perpetual or US settled, ETH settled, and our liquidity on those altcoins is actually pretty good. Although the liquidity on the BTC pair actually has proven to be very good, especially after that huge hit on March 12th in Bybit. However, with our linear contract, the one we just released yesterday, is quite an innovative product. Number one, you can actually do hedge trading. So I believe it's one of the first perpetual contract where you can have both long and short at the same time. Along with that, we utilize the portfolio margin, so that whenever you go fully hedged, you will never be able to get liquidated. That's number one. And also, when you trade on the linear BTC USDT, let's say you have a floating profit, you can actually use that floating profit to place more order, or even to trade ETH, USDT, XRP, USDT as such, because it's a portfolio margin. Right now, because it's the beta release, we only released the BTC USDT, but more peers are coming up. I know a lot of clients has been requesting some other coins such as Chainlink, Litecoin, Bitcoin Cash, and all that. We plan to offer those as well in our linear USD linear contract, because it's now much easier for us to offer any new product, because we don't have to worry about the security issue, the cold storage and all that, since it's all settled in USDT. Another feature, I guess, with the USDT linear contract we have is we implemented a lot more on-chart trading functions. So if you go to the trading view chart on Bybit, you can actually do some one-click trading, position reversals, close positions, all these cool small features, I guess, on the new linear contract.
So is it only, just to be clear, because the hedging and the trading view integration with order management is only for the USDT linear contract, or does it also apply to the inverse contracts?
Currently, it's only for the USDT linear, but if a lot of client likes it, we will obviously, it's very easy to also apply it onto our old inverse contract.
So when you say on the margin netting or the portfolio margin feature, is this only within the same pair, or is it also across the different crypto pairs?
Across different crypto pair, but within linear contract.
Oh yeah, okay, cool. And you mentioned the liquidity and the market making. How much of the market making on the platform is done internally by you, Bybit, or a Bybit close entity of some sort, and how much is incentivized by external market making firms?
We don't have an internal market making house; it's all external. But we do have some designated deals with the very early market makers who work with us when we launched.
So are these open DMM agreements, or is it something where you have a handful of external players who are incentivized and committed, and then it's just no more entries?
So it went to evolved the market making policy. When we first launched, we had 5 seats, what we call the designated market maker seats, where we offer them a very good rebate if they give us the liquidity we want, and obviously they have to follow certain obligations, such as keeping the spread within 6 ticks, and then they will have to 80% of the time or 90% of the time they have to give us 300,000 or 500,000 in liquidity for that. So originally we had 5 seats when we launched in 2018 December, but slowly, as we're gaining more and more retail clients, you can start to see these market making start to make very good money, even just on top of our regular rebate. So we slowly reduced the rebate incentive, and they were still perfectly happy with providing these obligation, because we actually have a very transparent what we call a liquidity contribution program, LCP. And if you go to our GitHub, you can actually see the LCP program that will give the market makers or any API connectors more what they call it, the more rate limit on their requests. So the more liquidity you contribute, the more rate limit we can give you. So a lot of these market makers are now working on the LCP program, try to get more rate limit. We can offer up to I think 500 per second or something like that. Yeah.
Okay, yeah, that makes sense. So the more active API users get more leeway on the rate limit. Okay, so there's no in-house liquidity provision. You've got the DMM program with externals that are providing sufficient enough liquidity. In terms of the volume that you guys are doing, you're currently like about a top 5 exchange in terms of volume after Binance, OKX, Huobi, BitMEX. And there were some traders last year who were claiming that Bybit volume was a bit suspicious, that there was some volume printed numbers that didn't match up against like top trader reports in terms of their P&L. Can you make a response to the traders who are skeptical about the volume?
Yeah, I mean, our volume current now it's 100% real. We actually have quite a few. Uh, Still, majority of our clients, if you talk about the number of clients, are retail clients. But if you talk about volume, I would say more than 70% are institutions. So, such as Jump Trading, Tower, all these guys, even Alameda, they are trading in Bybit, giving us a lot of volume. So the volume now is completely genuine, and even with the linear contract we just released, you can see the volume is very real there. Yeah.
No, those are some good names. Jump, huge. Alameda is obviously huge. Tower, that those are good. You seem like you got some good players on the market. Um, so why did you decide to run these USDT contracts as a separate order book versus the inverse contracts instead of taking an approach similar to, say, FTX or BTSE that has decided to use a multi-collateral system where users can either elect to use BTC or USDT in order to back their positions?
You mean just to offer completely in USD settled?
Yeah, like you sell in USD, but you can use any form of collateral. And in fact, on Bitsy, which we had them on the other day or the other week, a couple of weeks ago, they allow you to have the USD PNL get converted into an asset of their choice.
Yeah, so when we launched the USDT, I guess the to be honest, in the very beginning, we were very against. We were worried about the situation with USDT. So once we built a product based on USDT, we figured if something bad happens with USDT, with all these rumors, it would be very bad for business. But as Bybit is a very much global company, and we talk to a lot of in our Asia traders, they all prefer USDT, and I think I actually run a Twitter third survey and talk to some of the heavy traders on our platform. Most of these guys prefers USDT, and also we talk to our market makers. They say they will give us much better liquidity if we give them the USDT pair. So it was really from all directions pointing us. I mean, if we want to offer a linear contract, USDT seems to be the best welcome by the market makers, by the institutions, and even by the retail clients. And that's when we even contemplated providing another stable coin. Or do we need? Why don't we make another Bybit stablecoin? We even went through that route, but in the end, we called it off because it seems we're not going to be able to get enough liquidity for that. Yeah.
Yeah, I mean Tether is up to like what is it, $6 billion of market cap, and they've been minting coins like crazy this past month. So yeah, I think it's a good argument you make. I mean, Tether is especially popular in Asia, where it's difficult to get these dollar-denominated accounts, so people want to be able to hold the USD stablecoin. But to rephrase my question before, why do you choose to run separate order books instead of combining the contracts and then allowing, if I want to use BTC as collateral, I can deposit BTC, or if I want to use USD as collateral, I deposit USD, and then you trade the same order book, so it consolidates the liquidity, similar to FTX if you've used their product, for example. A lot of traders like this flexibility of using multiple forms of collateral in the contract.
I think we in the original stage we discussed that, and that kind of go back to the underlying structure of how the exchange was built, how the matching engine, and how the risk management, how the margin calculated. Because Bybit, we went through TPS, we went through more processing power. The modules are separated. So I'll give you example. For example, BitMax, it's very easy for them to offer a Quanto pair, or if they with BTC calculations to trade other pairs. But for us, because the margin calculation and the risk management is separated from the matching, it's very easy to make a mistake if we combine them all together. I guess so with the other model, you have the top-notch precision, but you give up the scalability. But for us, we sort of went for the scalability, and we figured, but if we ever want to offer a combined collateral product, we will have to rebuild the whole module from the start again. So I think that's when we had a conversation with our product team, and that was the conclusion sort of the IT gave us. But I mean, you never know. I mean, if that becomes growing demand, we could do that,
Yeah, that's a. I mean, yeah. Sometimes you have to make these compromises when it comes to tech and user experience and the risk, especially in high leverage environment. So let's talk about some of the lower level features in the platform in general. What sort of fee levels are you offering, and how competitive are they versus the competition?
The current fee is the standard, same as same as BitMax. For market makers, for a maker order, you get a 0.25% rebate, and for taker orders, you get charged a 0.75% for the taker orders. Yeah.
So 7.5 basis points on taker and 2.5 basis point rebate for maker, just like BitMax. Is there any reason why you don't offer volume discounts for high volume traders who would get lower fees to pay?
We actually are looking into it. We might start building a bracket sort of tier system where if you get a higher monthly volume, you get a different tiers. But our approach was that we always had so many promotions, either by registered bonuses or different. We have basically non-stop promotions going on with Bybit, and we're also very focused on retail. So in that way, we're actually giving back a lot of discounts through promotions, and that's how sort of the way we picked our approach in the very beginning. But now I guess a lot of the competitions are coming up, and this tier system start to make more sense. We're also looking into it. Yeah.
Okay, speaking of rewards, you have a referral program. Can you talk a bit about how large this program is in terms of fee sharing and whether the referred users get some benefit, and how long do you make the payouts, and is there a multi-level reward system?
So at Bybit, we actually have two programs. One is the referral, one is the affiliate program, which all serves different purposes. For us, if you are using the referral, you are mostly just a regular trader and you want to invite some of your friends to come and trade on Bybit. And so if you choose to use that program, you actually don't get a commission, but you do get some bonuses. And the bonus can be used as margin. I think whenever someone you invite makes a deposit, and you get $10 or $20 on top of that. Where the other program, the affiliate program, is actually most used, and that's why you see a lot of KOLs on Twitter and YouTube promoting Bybit. The ref link they are sharing is actually affiliate program. Our affiliate program is, I would say, probably Bybit is the first one to bring that kind of program into the industry. It's a complete CRM system for the affiliates to actually understand and help them to analyze their behaviors and conversion rates and reporting system. So it's a very powerful backend system where they can even edit their own links, create different campaigns, and use that to actually be able to become a full-time promoter and live on the commission. Yeah.
Yeah, I think you guys have done a really good job on that, offering both like a basic referral program for someone that just wants to share a link to their buddy, and then a more professional built out affiliate program. I think that's super key in this industry, and it shows that you're understanding how traders and the trading community, how things are very much word of mouth, and people rely on those who have experience to make proper recommendations. So I think that's clearly part of how you guys have had some success and growth past year. So what about order types? Can you just run through the basics of what sort of orders and any advanced order types that you offer on the platform?
We offer, I think, most of standard order types, limit order, market order, and then conditional order. So conditional order, you can actually set the trigger and then set your entry type, market limit, and then on the execution method, you have all these, good until cancel, queue or fill, and all these. We are actually working on a few more advanced orders. A lot more advanced trader asking us for the OCO order, so we are looking into that. Probably going to release that in 2 months or so. One of the most commonly used feature and most welcome feature by our trader is the entry with the entry order. Along with the entry order, you can set the take profit and stop loss. So that's not necessarily a new order type, but it's more like a conditional order. So when you set a limit order, you can actually pack a take profit and stop loss along with that limit order. And when that limit order get executed, then the take profit and stop loss, which is a conditional order, will get set in. So it's more like a double conditional order, which is proven to be very useful. So for any trader, you don't have to stare at the screen all night long. In case something happens, you can just set your limit order, and then once that enters, your take profit and stop loss can be automatically generated. Yeah.
Yeah, I think that's a cool feature. I would consider that like an OTO order, like one triggers the other. So you put a limit order in, and then once it's filled, it triggers a set of conditional orders for stop loss and take profit.
Yes, essentially that's actually OTO, I guess, but we present it in a more sort of retail focused, because I understand if you present it as OTO, a lot of
They'll be
the retail
confused.
clients wouldn't understand.
Yeah, exactly. But yeah, I mean, and that's the right way to do it, I think, is that retail traders just think of it like, all right, I want to make an order, and then I would like to have the stop loss and take profit set once it's filled. To call it OTO would probably confuse a lot of them. But when you have the stop loss and take profit both attached, do you have an OCO that is set on the orders such that when the take profit gets hit, it cancels the stop loss, or do they remain open?
I think for now it remains open, but we are looking into how to incorporate the OCO into our current order types to make it happen. Yeah.
Yeah, because, well, are they at least flagged as reduce only?
Yeah, reduce only we have also for conditional order, close on trigger. We have all these advanced types. Yeah.
Okay, because then the issue obviously would be if you have both the take profit and stop loss set on the position, that the take profit gets hit and then the price goes the other way, and maybe the stop loss triggers in such a way that they end up going the opposite direction. But if it's set to reduce only, then it would just fail to execute.
Correct. So you can use reduce only for that purpose. Yeah.
Yeah, cool. And then let's talk about leverage. Obviously, a lot of retail guys like to get higher leverage positions. What are your margin requirements across the different products that you offer?
Sorry, what was the question? I didn't catch the last part.
The margin requirements for the different products that you are offering, the initial margin, maintenance margin.
Yeah, I think for BTC is I can't remember exactly. Is it 0.5% or 1%? It's a standard, same as all these other ones. For the alt pairs, it's also the same, but we use a risk limit system, so to limit your purchases leverage use and also your required margin.
So it's basically like a replication of the BitMEX risk limit system, where you have a discrete jump in the margin requirements based on the size of the position that they're taking.
That is correct.
So why did you choose to go with this discrete model rather than just a smooth, continuous function for margin requirements as per size?
Yeah, that's a very good question. Actually, when we launched for the first, I would say 10 months, we never had a bracket system. It was the same unified required or maintenance margin for all sizes. We had that in the beginning, but we realized, I mean, as the platform is getting bigger, for risk management is really required to have that. And we were looking to, we want to build the more linear way, because that's what traditional space use, but we start to see that Bybit is still very retail focused, and in order to educate the clients about this linear ongoing one, it's very hard to understand and to calculate. But a discrete bracket makes it very easy to understand, and we don't have to educate the market. So that was really more of a business decision that, okay, let's just do whatever I understand, and so it's easier to we don't have to educate the market and teach the clients about this completely new system.
Yeah, that makes sense. And yeah, from a risk management perspective, it's essential that larger position sizes pledge more margin, just because they pose a bigger risk to the stability and integrity of the market. Can you talk a bit about the analytics that you offer on the exchange? There are some, particularly OKX, they are really good at producing interesting data that traders can analyze in terms of like the top traders and what their sentiment is, long and short. I mean, obviously in these contracts, if you take the entire open interest, then 50% of it's long, 50% of it's short. But if you take a subsection of traders, like the top most profitable or the largest traders, and you check the long short sentiment there is some difference which some traders find interesting. And do you have like a liquidation feed endpoint of some sort, where a lot of us here like to watch the OKX and BitMEX liquidations, and it's sort of like a trigger in and of itself of market action?
Yeah, that's one crucial point we're actually building now for our API feed. We understand, especially now we are very heavily trying to enter China. We realized a lot of these Chinese traders are requiring that info because they are so used to it. But yeah, we're actually building that, and it should be released maybe in a month or so. It will be the similar product, similar feeds, like you said. Maybe the top 100 clients, and also not the volume, but the number of, if you judge each individual account long and short, and then you place that into a map, you will see either more people are actually individually shorting or on a ratio or longing. So we will offer that, and also the liquidation feed, we will offer that as well. Yeah, so I think it's crucial to be to offer those to be more transparent. And actually, most of our current data are completely transparent online on our homepage. So that's one of our philosophy as well. Yeah.
Yeah, I think traders appreciate in general being able to grab this kind of data. What about the API? Do you have like a standard offering with REST WebSocket? Do you have Fix API as well?
We don't have Fix API. We have the standard, REST and WebSocket, both. Yeah.
Okay, and there was one question that someone had mentioned before about the order book view, that you don't have a grouping on the order book. It's kind of a small thing, but is that in the pipeline?
That has been in the pipeline, but it got pushed back because there's so many, agenda. But yeah, this actually, I told them to don't push back any further. We will, especially our liquidity now is getting very good. People would like to see, $1, $5, this type of grouping. So we're going to be offering that. Yeah.
Yeah, I think I've seen the implementations of it before, and the only concern really, because it's pretty straightforward, but it can lead to front end bottlenecks if it's not coded elegantly. Let's talk a bit deeper about this risk management model that you are using, because obviously in a high leverage derivatives environment, when volatility hits like we had a couple of weeks ago, then it's essential for traders to understand exactly how you are managing this risk. So the margin requirements, as I understand it, are similar to BitMEX, where it doesn't matter whether you're long or short, you have a consistent margin requirement. So I guess the first question is, how are you preventing people from being victims of these scam wicks that we sometimes see in the market? I know you use a dual price system with you have the normal traded price in the market from the order book, but you have a mark price formula. Can you tell us, one, what is the component of the index that you are using? And two, what is the formula for the mark price, which uses the index and then some kind of other maths in order to prevent manipulation in the market?
Yeah, so we actually spent a lot of time working on the fine tuning the index price, which is the base for the market price. Right now we have 5 exchange: Bitstamp, Coinbase, Kraken, Gemini, and Bittrex. But along with that, we actually used a very complex algorithm. But the calculation of that is online, and so if you go to Bybit, then search for index price calculation, you see the full formula. It's a very complex formula, which what essentially it does is, so this was actually released right after we kind of got screwed by Kraken, because they were sending us a scam wick, which really screwed up our Ethereum mark price. And at that point, I think 200 clients were liquidated wrongly. So we actually went ahead, first reimbursed all these clients, and then fixed our mark price and basically the index price calculation. So right now we do a number of filtering system. For example, if one exchange haven't given us a new price feed within I think 1 minute, we will temporarily take it out of the proportion for the index calculation. And also there is a metrics that we follow the majority of the exchange. If let's say 5 exchange, if one had a really anomaly, we would temporarily remove that and only include those 4 majority. But sometimes there's very extreme happens, which sort of happened last time, when there was only 3 exchange quoting prices, and that sort of becomes the dilemma. So we actually develop a very complex formula to make sure that our market price don't go crazy when something, either one exchange is going down, or either they are going through maintenance and all that. Again, it's completely online, so you guys, you're welcome to go check it out.
Yeah, that sounds good, that you're not making it too simple, because there are cases in high volatility where the spot exchanges have technical issues and they maybe spit out garbage data, or they just go down entirely, and you have to basically, it has to be complex in order to account for all the different cases. And I think it's good that you are willing to reimburse when you do make a mistake, because it might cost a bit of money, but I think the goodwill that gets generated by the traders who get a reimbursement, it helps to basically build loyalty in the clients, because if they can trust you and know that when you do fuck up, because it happens, you can't avoid it really. It's an ongoing improvement system, so they'll be more loyal if they realize that when something does go wrong, that you are honest about it and you reimburse them. So along the same lines, can you tell us a bit about any other anti-manipulation methods, like price bands or order limitations, circuit breakers, anything like that?
We have an order limit that each order is 1 million. So you can, if you want to place more order, you have to enter more orders. We also are looking into a price band for whenever the price goes too crazy, that your market order is not going to go nuts and create a huge spike in our order book. So that has been looked into and probably will be released in the following months. But other than that, we're okay with that. Yeah.
Okay, let's on the risk management side of things, let's walk through the liquidation process. I think most people are used to like the BitMEX style approach, where there's when the market price reaches the point where your P&L is down to the maintenance margin requirement, then liquidation gets triggered, and then there's an attempt to first partially liquidate the position, and if that fails, then the entire position gets liquidated, and if it can't be liquidated in the book, then there's an insurance fund which stands behind the market, which spends money to improve the order price in such a way that the order book does fill it. And if that were to fail, then there's an auto deleveraging triggered, which basically breaks off the open interest between the bankrupt party and someone who's on the other end. Can you walk us through your liquidation process and how it might differ from this? And what is particularly with the detail of how the insurance fund is used and any kind of logic of how the auto deleveraging works in terms of prioritizing who on the other side of the 50-50 long short, who is chosen to be broken off in that event.
Actually, I think you put in the very, very correct way, and I don't think I have too much to add. But it's exactly what you're saying. It's once liquidation happens, we are trying to partially liquidate you to bring you down on a bracket for the risk limit. So and also we will close your open orders in order to free up more margin to prevent a full liquidation. But at some point, when the full liquidation is triggered, and the liquidation engine takes over, and then try to throw, I believe it's the limit order into the order book, but it serves as a market order to throw the liquidation. And again, when there's a very big price deviation between the market price and the internal last price, either the insurance fund will have to reimburse, or the insurance fund will gain some money from the liquidation. Yeah.
And have you ever had an auto deleveraging event on any of the contracts?
Yes, for our altcoins, I think we had one for XRP and one for EOS. There isn't, we haven't had a auto deleveraging happening for Bitcoin. But we did have some bugs where some clients had, not a system-wide ADL, but because they had some bugs and they experienced ADL. But in the end, we checked out, we found the bug, and we reimbursed. Yeah.
So just to be clear, does ADL only get triggered on a bankrupt position if the insurance fund is zero? Like you spent all the insurance fund in order to try to fill it, and then it fails, and then you use ADL? Or do you have some kind of threshold on the insurance fund where you say, okay, if 20% of the insurance fund gets wiped, then we do ADL? How's the logic intertwined between those two?
Yeah, it has to be completely depleted in order to trigger ADL. So what happened for our EOS and the XRP when we launched them, I think it was a day or two after we launched, because the insurance fund was still very empty. That's when the ADL happened and it got triggered. That could sort of go back to my old, what I just said is, in the very beginning, we actually didn't have the risk management system. And even for our XRP and EOS, the minutes margin was 0.5% fixed. So you can imagine the liquidation was happening, and the insurance fund was growing very slowly. So there was, and that's when we realized, oh, we need to actually have this really have this risk limit system in place in order to prevent this. So that's how the whole talk started. So I guess, we're also learning all the time and improving our product.
Yeah, exactly. That sounds good. So just another thing I want to get clear is that given this system, does Bybit guarantee that users will not go into a negative equity balance on their account? Because you have experience in legacy FX markets, and in those markets, if there's a big enough move, then clients can actually go into a negative balance, and the broker would chase them down for paying the negative balance. What's your philosophy as a firm on this?
Yeah, that's a long story. First, we can guarantee there's no negative balance because there's already the insurance fund covering all that in crypto. And I actually experienced the Swiss franc event back in Forex time, where a huge number of clients went, bankrupt and negative balance. And I remember at the time, I think it was FXCM or Forex.com that was chasing the clients for, or Saxo, I don't remember, that was chasing for the negative balance, but it was very successful, even though all clients had KYC. But just imagine that we are trying to chase client in crypto where there's no KYC. Client can simply just register a new account with a new email. So it's pretty much unrealistic even to ask, right?
Yeah, exactly. And when you set up a system with an insurance fund and ADL in a bilateral market where you're matching the clients 50-50, you can easily break off the open interest to maintain the harmony in the system without the firm, the exchange taking on any risk. Whereas in FX, and I worked for Saxo Banks, and there was quite a bit of drama around the Swiss franc depegging. And actually, every time Saxo is making a post promoting their products, they now have a disclaimer saying you can lose more than your deposit. Like literally every single post they make has this disclaimer attached to it. But when you're an FX desk, you can't match your clients 50-50. So they don't have the flexibility that we have in crypto, where you can actually ensure that the firm isn't taking any risk and you're able to break off the open interest to maintain the harmony.
Yes, yeah, it was a very chaotic time back then, because all these broker were, their margin was getting hit so bad with the banks, and they were losing actual money, but clients were having high leverage. It was chaotic. Yeah, I remember that.
Yeah, but that's the good part about when you're running your own exchange in crypto. That's you're bilaterally matching clients, so you always have 50-50 long short. So the risk management flexibility allows to offer really high leverage without equally high risk in terms of the firm taking on any credit risk, which I think is one of the best innovations that crypto has done. Okay, so we've gone through the different product features, the risk management system, the different reward benefits and stuff. Let's talk about just the future, what your plans are. So you've done now a Bitcoin USDT linear contract where you deposit Tether and can earn and lose Tether versus Bitcoin. And I presume you're going to be adding the other pairs that you offer on the inverse side of things. But are there any sort of like interesting plans in terms of maybe offering like index futures or options, prediction market?
Yeah, so I actually had a product launch event
with Cointelegraph, I think 2 days ago. One of the product we're launching, I think by next week, is a option product. The problem with the current market is we examined there, but we examined the OKEX and also FTX options. We figured it's a little bit too hard for the average retail clients to understand, especially given that Bybit is a lot of retail clients here trading with us. So we're actually going to simplify the option product into what we call a contract insurance. So it's essentially still a standard traditional option, but we built it into the perpetual contract. Whenever you buy a position, either long and short, you can actually buy an insurance to cover your margin for that position. Right now, we are set to you can buy 25% up to 100%. And the beauty of that is obviously, as someone you probably know that using option to hedge is a much better tool, and this has been used in traditional space as well. So we figure let's present our client a better risk management tool first. So they will be able to buy it by next week to purchase this insurance or option product to cover their margin with on the perpetual swap. So in case something like a Bitcoin halving coming up, you are very unsure of what the market is going to react, either long or short, but you want to cover your current floating P&L, but also you don't want to lose the opportunity to gain more profit in case the direction goes in your favor. Then this insurance will be a very beautiful thing to use. Other than that, we have a few more coming up. I assume you might have some questions for this insurance card, for this insurance.
Yeah, so I think that's an interesting approach, and it's a bit more retail friendly when you brand the options contract as a form of portfolio or position insurance. How are you going to provide the liquidity on that? Are there going to be the same market makers that are active on the underlying contract? Are they just going to provide quotes on the equivalent of put or call to cover the position?
Right now, we are going with two designated market makers. One is called Chicoser. They are one of the largest option guys in China. We're actually talking to some other guys for another quote. So for this simple product, we are going to offer, we're not going to make it too complex with this part. But after that, in Q3, we're going to launch what we call a simplified option. For that, it will be completely transparent with the order book, and obviously you can be a market maker here, quoting the options, right? And also you can be a buyer or retail. But we are going to make the product much more simpler. So we are going to so basically retail clients can easily understand, other than the complex one we have now for the market. Yeah.
Yeah, because it's a cool idea, but obviously the devil can be in the details. If your market maker is pricing the options with a really high implied volatility, it ends up being not the best way to ensure the position. And some of the more sophisticated traders here at Whalepool, at least, would be comparing the price versus the equivalent on their bid options, which are the most liquid Bitcoin options, and they would rather self-insure via their bit rather than buying your version of the insurance. So I think it's really important to understand how these things are priced, so that people aren't just overpaying and they get some kind of protection, but they're paying 5-10 times the price. And BitMEX learned this when they offered their what they called up-down contracts, where you basically weren't allowed to short in the market, and you were basically paying way over the market price compared with their bid. So I think it's a good idea. It's just, from a trader's perspective who would be interested to use it, they just have to make sure they're getting the right price and not overpaying, especially on the IV side of the price.
Yeah, I believe so too. And for sure, for the longevity of the product, it has to be opened up. It has to be transparent, especially for the market makers. That's why when we build this simplified option, it will have the completely order book, and obviously traders are easily, you can compare that with their bid and what other people can offer. But the whole idea is that we as exchange, we think option is becoming very trendy. It's becoming and as a derivative focused exchange, we should have different options for the clients to choose. And we want to make it transparent, so that especially on the pricing part, is very competitive to any other product that the competitor offers. Yeah.
Exactly. That sounds good. So any other things that people should look forward to in terms of other kind of products or features?
We have a few another retail focused product, but I'm not sure the audience here will be interested. One of them is what we call a strategy alert system on the mobile app. So essentially, you can set a very complex alerting system on your mobile app on Bybit that, for example, one of the indicators or your Fibonacci retracement at some point got the price hit that, and we will send you a push notification telling you, hey, the indicator you set on this specific time frame has been triggered. Come check it out. So we want, because we observe a lot of our clients are moving into mobile, but we want to offer them some complex and some advanced sort of trading techniques into mobile app. So that's one of the direction we're taking. But down the road, we are going to launch, obviously, expiration contract, and probably even a sort of a ETF product we're looking into. Yeah.
So yeah, because right now you're just running perpetual contracts that don't expire. So when you look at the volume on other exchanges, the ones that offer time-based fixed maturity traditional futures, the volume on perpetual is just way bigger. So I can see from a business perspective why it's just easier to ignore the expiring contracts. But I think some traders like having the option to go long on the fixed maturity contracts because they don't have to pay an ongoing funding rate, and in an environment like now where the basis has been in backwardization on the futures curve, this offers some good opportunities. I mean, I personally like to build longs on the fixed contracts, which don't have any ongoing costs, and you can actually capture the discount. And then when the market does get bullish, it ends up trading at a premium, so you get like a double whack on the profits. But yeah, I think that would be cool. And the idea you mentioned about the strategy alerts, it would probably be interesting also to be able to trigger trades based on this. So if some kind of set of criteria is met, then it opens a long or opens a short based on what the user specifies.
Yeah, actually, that's the final step of this product. We right now in the first step, and then now we're developing this strategy alert. Then number 3 would be, along with that alert, you can actually enter either a market limit or conditional order to react to that alert. So it's, you can do everything on the go, basically. Yeah.
Yeah, that sounds good. Yeah, it sounds like you got some good stuff in the pipeline. And obviously these new USDT contracts that are launching as well. And maybe you can give us an idea of your outlook on the market in general. There's obviously been a lot of volatility, not just in crypto, but the legacy financial markets, and central banks are printing tons of money and engaging in a lot of monetary policy expansion, while governments are starting to spend a ton of money as well to try to support the market. How do you think all of this environment is going to impact crypto, and what's your medium long term outlook on Bitcoin and altcoins in general?
First, I'm not really a trader, so I don't have so much authority in talking about this kind of stuff. But I think with the outlook overall, I'm very bullish on crypto, even more than before now, especially with central bank printing so much money and everyone is a little bit unsure. I think, especially for Bitcoin or any crypto, this is the first major financial crisis we're experiencing. And if we sort of manage to get out of it, I think it's a very positive outlook. That sort of, so even the whole team spirit is high at Bybit. We are like, look, guys, it seems like crypto can really have a chance to take the center stage now. So it's let's focus on our product. Let's build more different products that our clients request, and focus on what we do the best. Yeah.
Definitely, I think that sentiment is broadly shared by a lot in the community. I mean, obviously, it's scary as hell when you see Bitcoin dropping like 50% within a week, but with volatility comes opportunity, and for people that are keeping a long-term outlook and they're not too over leveraged in the market and stuff, this is important. One last thing that I forgot to mention, because BitMEX, regarding the insurance fund piece and the volatility that was for a couple of weeks ago, BitMEX got some criticism from the community because their insurance fund actually grew while there was all this chaos in the market, and their price was dislocated, and they had a huge catastrophe with the performance of their system during this critical time in the market. Your system performed a lot better. There were relatively minor front-end lag issues for desktop users. But I noticed also your insurance fund actually it grew a bit, at least shortly after. Can you explain how this works? Because when the market drops so much, one would expect that it's more difficult to fill, especially some of the larger positions, and why there wasn't a bigger drawdown in your insurance fund to maintain the balance in the market.
Yeah, so I guess that goes back to the whole logic where how does the internal price deviate from the market price? If it deviates in the in the wrong way, the insurance fund would get depleted because clients' liquidations are triggered, and when you throw that same liquidation order into the market, it's a completely off price, and then basically insurance fund have to cover the winner's profit in that sense. We did experience some decrease initially, and then it sort of came back up. So that's basically what happened. So I would say it's really due to how the market price and the internal price was moving at the time. And also, we were lucky that we had a few market makers that were still doing their duties. So even the liquidation orders was thrown into the order book, and it was getting executed. The biggest worry I had at the time was about our market makers, that they would just submit and basically not doing their duties at the time. But they did get some hits, but we were lucky at the time, I think. So I believe that's exactly what happened.
Okay, and do you provide a history of the mark price? Because this mark price is what triggers liquidations and is very important. So in the name of the transparency insights that you've talked about, do you actually provide a historical time series of the mark price so users can verify that it was legitimate if they got liquidated at a certain price?
Yeah, we actually, if you go to our homepage on the very top, there's Bybit data. If you go to any contract data, there is a trading view chart for the mark price, as well as if you go to the trading area in Bybit, you always see two prices. One is the historical mark price directly visible on chart. One is the actual price. Yeah.
So I'm looking at it now, and under indices you have both the spot index, which isn't the same as the mark price, but then you have the premium index, and then the mark price is supposed to be a combination of these two. Is that correct?
Correct. So if you go to the inverse contract trading area, you will see a pink line, and that's exactly the history of the market price.
So you're saying when you go to the contracts and then spot index, is that the pink? I don't see a pink line. Hold on. Okay, yeah, I see it. Yeah, I got it now. Yeah, so you're saying the chart at the top where it shows the contract specs. There it has both a normal last traded price candles and then a pink normal line which shows the market price. Okay, yeah, that's good, because BitMEX doesn't provide this, and a number of other firms also don't provide this. But
we actually find it very helpful to provide this, because it's so much easier to explain to clients what happened, because still a lot of clients don't understand the market price triggers liquidation, and they will come to me and says, hey, how come your internal price never reached and I got liquidated? So we can say, hey, check this line here. This is our market price. You can see where it went, and it's actually much easier. And I don't understand why other exchanges don't offer it.
Yeah, because this is probably a huge area where the support gets inundated with all kinds of stupid questions from traders that don't understand it, and it's much easier to point to the resource and tell them, here's the mark price. This is why you got liquidated. That's how it is. You got fairly liquidated, and I think that's all traders really want. I don't think they mind getting wrecked. They just want to make sure that they got wrecked fairly in the market if they do get wrecked. The worst feeling, I think, for a lot of especially retail traders that don't deeply understand the system is that they're getting scammed by fake price data or whatever. So I think that's a great little feature there. Okay, I think we covered a lot of material here the past almost hour and a half. So I'll open it up to the listeners. If anything has been missed or you have any other questions for Ben, now is a good time to either type it in the text box, or we can also open up the chat microphone wise to ask him directly if you would like. We do have one question from Instabot is asking, are there any API differences in trading the inverse versus the linear contracts?
Yes, the linear will be a whole set of API. We haven't released the doc yet. We're releasing it tomorrow. So by tomorrow, all the API traders can connect to our linear contract, USDT settled. Yeah.
Okay, and then there was another guy asking a question about he's got a friend of a friend of a friend who hypothetically might be, well, I'm not going to ask that question, but so let's say that someone is let's say that someone is using a VPN maybe, and there's some kind of closure of his account that's necessary. Would you let them at least withdraw their funds before closing their account, or would you do you have a process or a policy regarding this?
Yes, client's fund is always client's fund, so we have no power in touching that. If the friends happens to, I don't know, we actually have a lot of we have a lot of promotions, and we have a lot of these bonus abusers coming in where they deposit 0.00001 or something BTC to abuse the system, and even that we allow them to withdraw after we give them a warning and close their account, so they can just withdraw and take their own capital back. So yeah, we will never touch client's fund.
Yeah, that's good, because I know famously Poloniex, when they implemented the KYC requirements, for example, they didn't let people withdraw. They forced them to provide the documents and then they could withdraw. And a couple of other firms also have done this. So I think traders appreciate, I mean, obviously there's some bad actors out there, people who are misbehaving in one way or another, either by, showing the wrong location that they are using, or engage in another kind of activities. And if they get caught, then yeah, they have to get their account closed, but at least to let them just take their money and get away. So I think between the light touch approach on documents being provided or anything like that, and the value of transparency and letting people maintain control of their funds and stuff, these are areas where I think a lot of traders are very grateful to have that kind of an exchange that is agreeing with these principles, because I think that's part of a lot of the culture within crypto and crypto trading.
Yes, totally. I mean, this is also, I guess, the principle of any exchange, even from back in legacy times, that client's money is client's money. So it's a matter of principle. Yeah.
And okay, let me try to open the talk power so people can ask on the microphone. Okay, the microphone's open to people that want to ask Ben, the CEO of the Bybit, any kind of direct question that wasn't addressed already in the past hour and a half or so, because we're wrapping this up. But I want to make sure that anyone who feels like they've got an issue they want to bring up has the opportunity to do it.
Yeah, I would like the opportunity. RJ speaking here. Ben, are you sure about what you just said based on AML KYC?
Sorry, based on what?
Based on AML KYC policies around the globe, are you sure what you just said in regards to the US?
Yes, we do not take US clients.
Based on the question, well, let me clarify this. Based on the question that was asked before by Swapman, thank you for the interview first of all, Swapman. You said if there's a client who, a friend of a friend that's from the US, you still let them withdraw if you have suspicion.
If you have, sorry, can you repeat that again? I couldn't hear the last part.
Maybe Swapman can rephrase it better than I can.
I think he just did. His connection is making it difficult, I think, to hear some of what you're saying. But if I understand your question correctly, you're asking him to verify that if a US person is busted in using the exchange, that they still have the opportunity to withdraw the funds and get away before their account gets completely closed. Like Bybit won't seize the funds or anything like that. Is that the question that you're asking, RJ?
So again, I'm just verifying if you're sure based on your AML and KYC policy that what you're saying is really the case, because
does that make sense, Ben? What he's asking, or?
Yeah, I can answer. You said basically we do not allow any US clients. If we do find any US clients happen to trade on Bybit, we'll inform you that your account is closed and you have to withdraw whatever capital you deposited.
Perfect. I think that's pretty clear then. Anyone else before we let Ben go has a question for CEO of Bybit? Anyone who's using Bybit or is curious to use it and thinks that we didn't hit on any important topic, now is a good time to mention it. Okay, someone in the text has said that when do you plan to add these fixed maturity contracts, so the non-perpetual traditional futures? When is that due to be launched?
That would be Q3 probably. Q3. We already have the specifics of the product being designed, but we haven't started coding yet. So that would probably be Q3. Yeah.
I think one of the challenges when it comes to those types of contracts is that when you're developing the mark price, you have to develop it in such a way where it's flexible enough to allow for a premium in the market versus spot. And also for right now, for example, we have discounts on some of the expiries. So it's a bit more artistic to develop a fair mark price in this context.
Yes, I agree. Yes. So for that, I think the team is looking into it very hard. We also, whenever we push out these new products, we want to make sure that it's based on what our clients liking, and make sure the product is easy to understand, easy to trade, and make sure that the fundamentals are there, and you can trade it very fast, no overload, no this type of issues. Yeah.
Yeah, sounds good. Okay, last call for anybody that has. Oh, yeah, Instabot. I actually had that written down, but I forgot to ask. Ben, about sub accounts. A lot of exchanges, they offer the ability for people to have sub accounts where they can isolate positions and separate it under the same account. Do you offer sub accounts? We know that you offer these hedged positions, you call it, on the USDT contract. Where you can go long and short, but you also offer sub accounts, or do you plan to offer any sub account functionality?
Yes. So actually, we just had a product meeting last week.
It was weird.
Yeah, sorry about that, Ben. We had a server issue. I just had to restart the server, but they were back online now. I just want to make sure that the recordings are back to recording, so we can. I mean, we're basically done anyway, but just to have a clean finish. 1 second.
You just have an overload.
Yeah, it's so popular your talk that we get overloaded. No, I think it's just some random server issue. Just had to restart it and it fixed up. Okay, the stream is back online. Sorry about this minor disconnection there. I think you left off talking about sub accounts and that you had a meeting with the product team about sub accounts. So let's resume from that point, if you will.
Yeah, so we were very excited about this whole sub account. We're actually going to build it into a very powerful tool, not only for retails, but also for fund managers and for whoever having the need to multi-manage the account, especially in a sort of a company structure or. But let me tell you what's the plan. But this is just the complete ideas and blueprints. So step one, we're going to be offering the sub accounts. Simple sub accounts, just any mother account can create sub accounts and do internal transfers and all that. Step two, we will start to give the sub accounts read-only password, what we call, or investor password, and also trade-only password, so that if you are a company owner or you are a team leader, you can actually give that trade-only password or the read-only password to your clients or to your trader, and then you'll be able to they will be able to monitor or manage only that account. Step three will be even some sort of management tool or management system that I can set on the sub accounts that I only wanted to be able to lose how much capital or be able to trade in what position size. And even we even talked about even some sort of a multi-terminal system where the mother accounts can be able to send out a trade, and sub accounts can automatically follow based on the margin, the position size, or the ratio that you're setting. So it's what we have in Forex. I'm trying to make it happen in here with crypto. I'm sure Swapman is quite familiar with what I'm talking about. Yeah.
Yeah, I think that's a good structure for doing the sub accounts, and I think this social trading feature, which is popular in. Sorry about that again. I was saying about the following traders on the platform, where you can basically, if I'm a trader that has good profits, then I can let traders follow my positions, and then I can earn like a reward for those who are engaging in trading because of my performance and allowing people to copy my trades. I think this kind of incentive creates more of like a community within the platform and gives even more incentives for people to earn rewards. If that makes sense.
Yeah, no, it makes total sense. But we haven't decided how far we're going to go with this idea, but definitely sub accounts will be available, and stage 1, stage 2 will definitely be implemented in Bybit. Yeah.
Yeah, I think this you call it mother account. Others call it like master slave account, where you have like a master account which has subordinate accounts. This is a pretty classic structure to do it in. Someone else in the text mentioned they would like the stop loss and take profit within the order to appear in the order book, in the order entry form, rather than as a pop-up after you have made the order. I don't know. That's just a random feature request from somebody.
That's already implemented in the linear USDT perpetual. So if you check that, it's already there. It's no longer on the order confirmation. And we plan to implement that also into our inverse. Yeah.
Cool. Okay, I think we are basically finished. If anyone has any pressing comments before we wrap it up, Ben's been kind enough to spend almost 2 hours with the Whalepool community. We really appreciate all the time that you've spent addressing the questions directly. None of this has been censored. Ben has been open and willing to answer basically anything, and we really appreciate that openness and transparency. Not all exchanges are that open, so thanks very much, Ben, for your time and your transparency with the community with all this.
Thank you, everyone. It was a pleasure. It was a pleasure here speaking to you all. Yeah.
Great. So then we'll get this. It's been recording, so we'll get it on YouTube. And as I understand it, there'll be also some graphics included in this, which help to explain and understand the Bybit product for those who are interested. And we'll get that posted on YouTube and Twitter and everything.